From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming April 15th Forex session. Uh, Looking at this pair, and this is the dollar yen daily chart. I have it zoomed out quite a bit so you can really get a grasp as to what's been going on since back in late October. How we've just accelerated to the upside, and it does look relatively parabolic, quite frankly. And this is especially true when we look back uh, this latest run from last week, or the week before last, that the Bank of Japan basically came out and said that they are going to blow up the yen. That's my definition of what they said, obviously, but you can see what that announcement did to the market. We have basically gone up about 700 pips or so in about a week and a half. So, having said that, this market needs a pullback, and that may be what we're looking at based upon the Friday candle. I'll go ahead and zoom in, and you can see that, interestingly enough, Thursday had printed a hammer. And when you get a hammer at the top of a run like this, it means one of two things. It either means that we're trying to build up enough pressure to break out of resistance, and 100 is a very obvious spot for resistance just because of the psychologically significant nature of the number. And then looking at the longer term charts, it has been important several times. So, having said that, the fact that we formed this hammer, of course, was very interesting. But when you break the bottom of a hammer like this, it becomes what is known as a hanging man. Very, very negative sign in Japanese candlesticks. This doesn't mean that I'm ready to start selling. Quite frankly, it means the exact opposite. I'm looking to buy this pair, but I'm looking to buy it at a lower level. I think 97 is a candidate where we could see support based upon this previous high. 95 I think is kind of obvious as well because of the previous action here, and then the fact that it is 95. And then on top of that, 98 could offer support as well, just because of this gap. So there are plenty of places to think that this pair could drift down to that will make a nice buying opportunity. With that in mind, I'm actually going to be sitting on the sidelines and watching this pair very intently. One of the most rookie mistakes you can make is to go ahead and buy at this point. It doesn't mean that the pair can't go higher and break above the 100 level. On a daily close above the 100 level, I would have to believe we would go parabolic again. But my suspicion is, and even the Bank of Japan recently has stated that a range of 95 to 100 is relatively acceptable. My suspicion is that we will see a pullback, and it will offer a buying opportunity. I think we go much higher. Don't get me wrong. I think ultimately this pair goes much, much higher. And when you switch to a monthly chart, I mean, we could be talking to about 108, maybe even 110, possibly by the end of the year at this rate. But, as you can see on the monthly chart, we are at a very significant area, and a pullback would be to be expected. Quite frankly, I mean, we've gone straight up. This hasn't been a pullback. This has been just an absolute tear. So my analysis remains the same, remains bullish. But I think taking advantage of the cheaper dollar just simply adds value to the longer term trade. This can be said about many of the yen related pairs. A perfect example is over in the euro yen pair, which on the weekly chart, I'll switch to that real quick, you can see formed a perfect shooting star. And that's another thing that should be said about this chart as well. If you switch it to the weekly chart, it's another perfect shooting star. So there's all kinds of signals that we're going to fall. Selling here could net some profit, but quite frankly, I think this is a one-way trade, and if you're just patient enough to wait a couple days, you probably will get the buying opportunity you're looking for anyways.